Good morning, ladies and gentlemen. My name is Christian Garcia. Welcome to the Gold Silver News. Today is October 29th. Well, the big news this weekend was the settlement or agreement that was made between all the EU leaders in the Eurozone to go ahead and help out and rescue Greece. Now, basically, this was what you can call a Bear Stearns moment. What I mean by that is a few years ago, if you remember, when Bear Stearns got bailed out by the government, all the other banks and lenders and institutions and investment bankers knew the direction that the U.S. government was going to take. That set the precedent to go ahead and too big to still go ahead and start the too big to fail. Well, now all these governments are now too big to fail in Europe. So this is the moment. Now investors know what's going on. And let's go ahead and look a little bit about the deal and see what it entails, okay? The debt deal basically involved Greek bondholders and banks taking a 50% haircut or write-down, which led to a recapitalization of the European banks by 106 billion euros. And the most telling sign was that they boosted the EFSF rescue fund by $1 trillion. And this just delays the inevitable collapse of the Eurozone. And this caused the euro to go ahead and climb against the US dollar, and gold and silver ended up for the week. Now we know the script. Investors know the script. The EU leaders will cave in and they're going to go ahead and bail out any government that needs money in the EU, starting with Greece. And you could tell that they know that there's going to be more defaults, because the fact that they increased the Euro Rescue Fund from 440 billion euros to €1 trillion means that they estimate or are guessing and assuming, which is rightly so, that other countries will go ahead and suffer or are going to need money. And as of Friday, you can see that bond vigilantes started attacking Italian bonds. So it's not going to end. This was a green light for the bond vigilantes to go ahead and start having a field day for the next few months in Europe. They're going to start attacking every country because they know the EU leaders will step in and rescue them. And it's talking about the EU leaders. Nobody seems to be asking them or anybody, where's this money going to come from? There's reports that China is going to go and step in and help out with the Euro Fund, which is kind of funny because basically they hold a lot of US dollars or depreciated US dollars. So basically they're going to exchange their depreciated US Treasury bonds for depreciating Euro bonds. It's just a hot potato game of all this bad debt. It's a Ponzi scheme. All this currency that's or bonds that are being created, it's just depreciating the value of our purchasing power. Whether they call it recapitalization, quantitative easing, those are just fancy words for money printing. And speaking of money printing, let's look what the government has in store to get us used to go ahead and using coins.
Now, Washington watchdog, what if we could give you a simple idea to save taxpayer money? Replace the paper dollar bill with a coin. Could reduce the deficit by billions of dollars. So will you sign on, and will your neighbors? Here's ABC's Jonathan Carl.
Dollar bills. We all use them, of course, but those paper dollars are wasting our money.
We could save a lot of money if we went to a coin dollar, period.
The problem? Paper dollars wear out quickly. Each and every bill needs to be replaced every 36 months or so. At 7 cents per bill, it adds up. A recent government report says eliminating the dollar bill and replacing it with the more durable dollar coin could save $5.6 billion over the next 30 years. In fact, the government is already making nearly $2 million coins every day, as we found on our recent trip to the Mint in Philadelphia. But right now, nobody seems to use them.
Here at the Federal Reserve in Baltimore, you see the coins packed in plastic bags, stacked on top of each other, aisle after aisle. Millions and millions of dollars in dollar coins just sitting there.
We consumers are the problem. As long as the dollar bill is around, most people just won't use the dollar coin.
So you have to eliminate the dollar bill.
Shocking, but yes.
Now, if you look at the distribution of investor global holdings by asset class as a percentage, and if you look at the total percentage of mining shares and gold held as an asset class in different eras, you can see that they're at the absolute lowest they've ever been. Now let's look at the total of gold and silver eagles coins that have been sold and why you need to get as many as possible. As you can see, ladies and gentlemen, by the gold and silver sales by the U.S. Mint compared to the global assets that are being held worldwide, We're not in a bubble, ladies and gentlemen. There's over 150 million working Americans alone, and not even including how many people that exist on the planet, but just 150 million working Americans in the United States. And the U.S. Mint has sold less than 1 million American Gold Eagles. And if you look at their Silver Eagles, they've sold some 30 plus million ounces. So we are not in a bubble, ladies and gentlemen. If you look at the YouTube views, and if you look at Mike Maloney's debt collapse video, case for $20,000 gold, you can see that he's only has at the most 300 and some thousand views. If you look at the news updates that we generate here, you're looking at an average between 5,000 to 7,000 views. People don't know what's going on. We will be the 1% once this greatest wealth transfer happens, like Mike Maloney happens. So until Mike says differently, keep the course, stay focused, and keep accumulating. Thank you for watching, and let us know you like this. Thank you.